When we talk about financial statements, so mainly that financial statement will have detail about the lists and detail about all assets and all data. So mainly if you talk about financial analysis, so basically we will be talking about the functions of financial analysis. So let's go to Excel. So first of all, we will explain these terms. So whatever terms we are talking about in terms of financial statements. The first term, let's say if we talk about loan related details, like, so first of all, let's say we have it something like loan and the loan amount actually. Then we have something called rate of interest. Then we have the period or tenure, what we call it, and then we definitely will have the future value. This is very important, or we can say that a balance. Okay, and we have something called EMI. So these terms we have to understand first. So basically when we talk about financial data, so in terms of let's say if you talk about banking sector for instance, so they deal with huge amount of loans, and they talk about rate of interest and period and tenure and definitely the future value and the balance. So one thing we have to understand from financial data perspective, that what are these terms known as in terms of Excel. So first of all, let's take a situation. There's a loan amount of 1 lakh for which I want to calculate the EMI. So we have entered 1 lakh. Now this is case 1. So I can say like this, case 01. Rate of interest. So rate of interest is actually calculated, like, let's say if I say that it is 6% rate of interest, so that will definitely 6% per annum. So I'm talking about per annum. So if we want to do the calculations here, we have to definitely convert it into months. So actually this will be equal to 6% by 12. Okay. So this, so this is in percent. So actually 6% per annum will be actually your 0.5%. So 0.5%, when we need to write here as an interest, we write it as 0.05. This is 0.5 actually. So 0.5, how we write it? 0.05 like this. And tenuity, let's say we take some fixed tenuity, and then we have the future value. So we always see that the balance after calculation or after giving all the EMIs for 48 months, my balance with the bank should be 0. Now we are heading towards calculating the EMI. So now let's understand the terms that are used in terms of Excel. So this loan amount is known as PV. So this PV stands for principal value, or we also call it present value, like this. Similarly, rate of interest is termed as rate. So there is no special name for it. And this particular period is actually termed as N per. Future value is termed as FV. And EMI is termed as PMT. So why I am writing all these names or all these codes here is they are actually the base of functions that we have in Excel. So what happens if I want to calculate the EMI at any given time? Then what we will do, we will come to this particular cell and say equal to PMT. So just we have seen that this function is termed as PMT. So that's why we are using the function called PMT here. PMT takes 4 parameters mainly. So even if you don't give the 4th and 5th parameter, it is absolutely fine. We don't require the type. And we are saying the rate first. This is the rate and period, and then loan amount or the present value and future value. The moment you put all these things, you simply press enter and you see that some amount has come. So this amount is actually coming in dollars. So that is the by default speculation, by default calculation that our financial point of view gives us. So what we have to do, we have to just go to format cells, and if you're not comfortable using the dollar sign, we can say it as none. Now in terms of currency, in terms of finance, your negative values are actually given as or closed in parentheses. So we need to understand why this red color is coming and why this bracket is coming. So we just say currency and none, say okay. So now let's understand this. Now when we say that we have taken a loan from bank and the loan amount is 1 lakh. So if we consider this loan amount as positive value, then the EMI that we are paying to the bank will be termed as negative. So something, if you consider one amount as credit, the other amount will be debit. So in the same way, if you consider, let's say, the loan amount as negative that I am taking from bank, then definitely you will see that the EMI comes as positive. So it depends on like what kind of calculation, what kind of speculation you are making from this particular data. So either if you put loan amount as negative, you will see that the EMI amount has changed to positive, which is the payment amount. And if you put this loan amount as a positive value, then obviously it will be a negative impact on the EMI. Now this is case 1. Similarly, what we will do, we'll create some cases here to understand how these financial calculations work. Like this. So next thing what we are saying is that, let's say a rate of interest being same for all the cases. Let's say we will check 3 or 4 cases here, but in all the cases, let's say because this is a static thing, so our rate of interest will not vary. Now in the second case, let's say I just wanted to check if I am capable of paying let's say 6,000 as my EMI, like this. So first of all, what we will do, we will format these cells like this, so that whatever we write should be in terms of finance. So next option, I'm saying that, okay, if the EMI is 6,000, then the rate of interest is definitely 0.05 what we have calculated, and I keep my tenuity also at 48 months. Future value will definitely be 0. If that is the case, then how much loan I can expect from the bank? So what we are doing, we are just reversing the condition. This time what we are saying that we are setting the EMI and we want to find out the loan amount. So just keep it in mind that these whatever terms we have written over here, NPR, PV, PMT and FV, these are all actually functions in Excel.